Hello everyone, and welcome back to our channel. Today, we will take a deep dive into the Australian property market from an investor's perspective, especially in light of the recent decision by the Reserve Bank of Australia, RBA, to cut interest rates to their lowest point in over 2 years. We'll explore how this impacts investment opportunities and what strategies investors should consider in the current economic environment. In today's episode, we will analyze the implications of interest rate changes for property investment, the current market realities, and the actual significance of government first home buyer incentives for investors. Let's get started. Recently, the RBA cut the benchmark interest rate by 25 basis points to 3.6%, the lowest level since April 2023. This decision was driven by a drop in inflation to 2.1% in the second quarter of 2025. For investors, this means lower borrowing costs, which could encourage more buyers to enter the market and potentially drive property prices higher. When interest rates decrease, the attractiveness of real estate investment typically increases. Investors can secure financing at lower costs, which is good news for purchasing new homes or investment properties. However, the actual market conditions are not that straightforward. The RBA has indicated that the current monetary policy remains restrictive, meaning many households are still feeling financial pressure. Next, we need to discuss the current realities of the market. The RBA has downgraded its GDP growth forecast for 2025 from 2.1% to 1.7%. This indicates that public demand growth has not met expectations, presenting significant challenges for investors. According to data, Australia's economy grew by only 1.3% in the first quarter of 2025, falling short of the 1.5% expected. This indicates weakened consumer demand and shrinking public spending. For investors, this might affect their decisions regarding particular areas or types of properties to invest in. Moreover, the sustained high levels of immigration and a shortage of housing supply are primary factors driving property prices. Understanding these elements is crucial for investors looking to capitalize on current market conditions. The government's recent first home buyer incentives may be good news for first-time buyers, but what does this mean for investors? While the government plans to build 1.2 million new homes by 2030, such initiatives will take time to come to fruition, and market demand remains strong in the interim. For investors, this means a need for more flexible strategies to navigate market fluctuations. In this environment, investors should be cautious and choose properties that are likely to appreciate in value over the long term. So, what practical advice can we offer to those looking to profit in the current market? First, investors should assess their financial capabilities, get pre-approved for loans, and calculate their capacity for bearing costs. This will help avoid unnecessary financial strain during the purchasing process. Secondly, avoid the temptation to seek a dream home right away. Consider investing in lower-priced properties initially, with the option to upgrade later as the market improves. This strategy can help you establish a foothold in the market while building a solid foundation for future investments. For instance, some investors accumulate capital through purchasing investment properties, and when market conditions improve, they can sell or exchange them for their ideal homes. This investment approach can effectively mitigate risks while generating steady returns. Looking ahead, despite challenges, opportunities exist. As the market evolves, investors may find suitable prospects. Staying flexible and closely monitoring market dynamics are essential for identifying investment opportunities in this uncertain environment. For example, analysts predict that further rate cuts may occur in the future, impacting the property market significantly. Thus, investors must remain vigilant and seize the right moments to enter the market. In conclusion, while lower interest rates and first home buyer incentives may offer some short-term benefits, investors must carefully consider their options in light of market realities. I hope today's discussion helps you better understand the changes in the Australian property market and how to seize investment opportunities. If you found this content helpful, please give us a thumbs up, subscribe to our channel, and share it with your friends. We'd love to hear your thoughts on this topic, so feel free to leave your comments below. Thank you for watching, and we'll see you next time.